right, hello, welcome, good afternoon, everybody. I suppose also good morning, good evening, depending on where you are in the world and when you are watching this. You are joining TG Watkins, Director of Stocks at Simpler Trading, live for his State of the Market session. TG is unpacking the Moxie signals, the sector is gaining momentum, and his Q1 2026 stock setup sheet, giving traders a roadmap as the market sets up its next major opportunity. Oh, and giving traders clarity before the next major shift begins, as it may be. All right, TG, the stage is set, the floor is open and yours. Please take it away, sir.
All right, guys, let me see if I got this up and running. I'm going to assume that Daryl stopped his introduction. I had to restart my browser here because I needed to make sure that I have to restart this thing in order to make they call it the firewall or something like that works. So, yeah. Okay, Daryl, good. Thank you. I got that working. I got my microphone on. I got the record button on. So I think I'm just about there. Looking pretty good here. Okay, let's see. One more thing here. Okay, let's see. There we go. Okay. And let's get this all going. Looks like we're good to go. And then let me make sure that I'm ready here. Okay. And we can throw the camera on. And then hopefully, Daryl, I think you are restreaming it out there for everybody else as well. And looks like we got a good room here. Okay. Awesome. Thanks, guys. Appreciate your patience as we get going. Yep, Lorna, looks like we're good to go. And welcome to everybody here. My name is TG Watkins. I'm Director of Stocks, and then I also dabble in options now. As Sam would say, I've now drank the Kool-Aid from Simpler, and I'm into options and doing some of the zero DT stuff as well. All right, so this is going to be the state of the market. Today is January 13th, Tuesday. And who knows, we might have some fireworks this week. I think the market's feeling a little shaky up here, but hey, we've had a great move, haven't we? So the start to the year is really, really nice. And definitely seeing some rotations out there that I'm going to be diving into. I think it's going to be an interesting year to say the least, but it should be a good year. Okay, so let's dive into this. Remember, this is for educational purposes only. Basically, keep the lawyers at home, let's play nice, and let's make sure we kind of all trade nicely together and have a good time while we're here. Okay, so welcome to 2026. A little bit of recap from what we were dealing with 2025 is we had Trump 2.0 as the next president, and then we promptly experienced a 20% correction due to the tariff tantrums. I already talked a lot about that last year. It was both good and bad. I think we actually handled it quite well. I'll show you. Actually made some really good trades off the bottom. But that really helps spur the market up, and then we'll have to see how we do next with what's coming up with the Supreme Court opinion. Now, whenever that comes out, we're not really sure. It could be a surprise. Who knows? So that was kind of the big thing for the year, along with some AI stuff like that. But 2026 is going to be picking up from a turbulent end of 2025. I think you guys kind of saw that. I've been putting out some videos about it. We had a really, really strong year, and then basically the beginning of November, suddenly everybody got some cold feet, and we saw some of the high flyers start to come down, and then the market just kind of stopped, and then we had a kind of an early Santa Claus rally that got a little deflated, and then the market is just like, we're done. We're just going to sit here for the last 5 days, and that's kind of what that was. And then for 2026, I think one of the big things we're going to be dealing with is, well, not dealing with, but that we have coming up is that we have a new Fed chairman. As we all know, right now, Trump has been talking a lot about the Fed and all that. So this should be an interesting one. This will probably help define 2026 as far as some of the politics for the stock market. Okay. And then as far as 2025, the market on the surface was able to shrug off that AI stuff, the fear that we had, the cold feet and everything. And now really the question is, are those names going to come back? Or what tickers are going to be the new leaders? We have seen some of these come back. You know, APLD is doing pretty well. We're starting to see some other ones warm up, but there's definitely a switch of some of the leadership, and I think that will also be what's interesting for 2026. We know precious metals have been leading, but I think the biggest question is, will they continue? I will talk about this towards the end of the presentation, kind of my thoughts about that. And then what about crypto? This was also going to be something I'm going to be discussing because, well, for those of you who are in the Moxie room trading with me, you know that this is something I've been talking about a lot over the last couple months, and they're looking pretty good. Okay, so if you guys don't know me, because I'm sure we're going to have a lot of new faces in here, we're also putting this out on the internet. My name is TG Watkins, Director of Stocks at Simpler Trading. You guys can find more information about me over on X at TG_Profit and LinkedIn and all the various places. And then a little bit of the story that I like to tell about myself is that it was really my dad who got me into stock trading. You know, I think a lot of us have those influences or people who are around us, and he was one that he managed his own money. And when I was really, really young, he put me on his lap and we'd kind of look at stocks and say, hey, is this going up, down, sideways? And then he actually took me to my first seminar, which looked a lot like this. And it was actually in Texas. And we did this when I was 10, 11, 12 years old, something like that. And I didn't know what was going on and all these things on the charts and whatever. But I knew it was important. And I remember asking the presenters there, and I said, hey, is this possible? Can you really make money from all these things that are on the charts and screens? And he said, yeah, but you have to learn it. Like, nobody's born knowing how to do this. And he said, so that kind of encouraged me. I was like, well, if you can learn this, then it's possible. And if you can learn it, then you can teach it. And if you can teach it, you can learn it. So that was the whole thing that really inspired me, especially when things got difficult. It's like, okay, there's a way to do this. And so that took me kind of full story or full circle to where I was now presenting at the Money Show. And we got John Carter and Trendy, and we got Mary Ellen and Chris Bretcher back there too. And so now I'm on this side. And so this is kind of my path. I never expected to be here, and yet here I am. So it is possible to learn this kind of stuff. You just kind of have to stick with it and be disciplined. And then a little bit more about me. My interest shaped my trading style. My dad and I are both pilots. I come from a long line of pilots, and you know we have checklists, and that's how we make sure that we have a safe flight. And I basically created a checklist for trading with the Moxie indicator and rules with moving averages and all that kind of stuff. It's more like a flow chart, but still same kind of idea. And that's what I do and use in order to make sure every time I get into a trade that it's appropriate and that I'm not missing something. You know, one of the biggest things that as a new trader I was really good at, unfortunately, was I was good at finding the bounces in downtrends. And so I'd get in, make some money, only to have it roll over a little bit, and then I'd get stopped out. And I didn't understand. I was like, I'm catching an up move. Well, it was a bounce and a downtrend. And so I had to kind of work with moving averages and understand the concept of multiple time frames to really stop doing that. And so much, much better about doing that now. And then for anybody who doesn't know a little bit about me, some fun pictures. This is our glass air. It's a kit built, but pretty fast up top. And during COVID, you know, had a good time with the market, so we decided to upgrade to a glass panel. I know we got some other pilots and some other techies out there that like seeing this kind of stuff. So that was the work to do this, and now it's all finished. And then we got the hanger. My dad has a 1970 Camaro. I've got a 1977 Camaro. And yeah, those are our two toys down there. So kind of fun stuff. And that's my dad. He's the one that got me into all this. So if I lose money, I got to blame him, right? Okay, and then speaking of the tariff tantrum rally and all that, or the tariff tantrum lows, this was really beneficial for me. We were actually able to, in the Moxie room, we were able to go to cash basically at the top. I could see that something was happening with the market, it was rolling over. We went absolutely to cash, which was a great decision. And then as it went on, there were some telltale signs. Some of what I'm going to be talking about is, you know, we got a very active administration. We have a very active president. And I know it can feel like it's like trying to hit your head against a wall, trying to work with some of the things that come out of the administration. But there are things that we can do using technical analysis and using the Moxie indicator to help figure out how to actually navigate this market. And that is how I was able to absolutely nail the lows on the tariff tantrums. And I went long, and you guys in the Moxie room, you guys know this. I went long SOXL call options, 30-day call options, and we had about 2 or 3 days left until they expired, and we nailed a 2,061% gain on that. And it was because there were some technical setups that told us that the low was in. They're repeatable. I can show you. They're there, and some of those things are what I'm using right now as we speak to catch some of these lows in the market and some turns that I'm seeing out there. That helped me bring in 420% in 6 months from the tariff tantrum lows all the way up here. And as I said, the end of the year, November, December was a little wonky. All the fun stuff kind of just fell off the face of the earth, but they're starting to come back. So I'm pretty excited about 2026 and how we can go forward with that. So yeah, as far as this trade, we turned $38,000 into 683. That was a good one. Okay, here's a little bit about what the end of the year was looking like. It was a little weird because I felt like the market was kind of getting locked up. Tax loss selling, tax loss harvesting. We saw a lot of these big names that were doing pretty well. They just smashed them, and they said, okay, either we're not so sure about this, or we took profits already, or they came back and it's like, they're not going to come back in time. So the big players were really just like, look, we're just going to let these things go. We're just going to let them do whatever and kind of sit there. And then what you guys also probably saw was that before Christmas, there was an early Santa Claus rally. And I made a couple videos at the time because it came out with that list that somebody had posted on X, and it said, "Wow, look at this! Santa Claus is here. There's these huge moves." And I was like, "Careful, this is just a bounce. We need to see if there's any follow through." And into the end of the year, there was practically no follow through for these names. And I was like, "Wow, okay, I guess that's it. We need to be a little bit careful." But then the funny thing was, they really just waited for the new year with a new book. And boom, that's when things started to come back. I mean, I know all of you guys have been seeing this and watching it, but you can see it here. Just NVTS was an example. As soon as we clicked over on a new calendar day in 2026, man, that's where the move was. So it's not like this market was terrible or falling apart or anything. It's actually they just had some structural things that they have to figure out as far as closing their books and rolling over to a new year. And that I'm encouraged by that. I'm actually happy to see this kind of energy that we have in the market. So yeah, that's been actually really nice, and that's why I'm saying I think that if any kind of weakness into the end of the year was them just kind of needing to close their books, and now we can start on a new, fresh chapter. So very happy about that. I also want to point out right there is a Moxie price trigger. So for those of you who don't know about the Moxie indicator, stuff like that, just start looking at these charts. I want to post these with you for you so that you can actually see what I share on my screens, what the indicator looks like, and how I trade. And you can see right there's the Moxie price trigger right on cue. Okay, it's a pretty good indicator. Okay, then what I want to show you here is kind of, and we got the indices at all different places, all different levels. They're kind of doing their own thing. So this is a little bit of a stock pickers market. After the tariff tantrum lows, yes, of course, everything just was on fire going to the upside. And then they started to diverge, especially in November when we got the hot stocks that fell apart. You can see the FFTY, that's the IBD 50. That thing just, had a huge air pocket. So this fell down. This is a weekly chart. You can see ARKK came down pretty hard. The RSP, I'm actually really encouraged by this. I believe we're seeing a broadening out of the market. And as you can see, the FANG stocks not really doing that great. The MAG's not really doing that great. The NASDAQ is kind of somewhere in the middle. We know the S&P is kind of working its way up because it's in between, say, the NASDAQ and the RSP. And then the financials were doing pretty well. Trump might have kind of, shaken that tree a little bit, but I have a feeling it's just going to be a buy the dip opportunity because I think these things are still going. But yeah, generally financials are going well because, well, this economy seems okay and interest rates are coming down. So the financials like that. But yeah, just look how we're all over the place as far as these indices. So we're probably going to get rotation throughout the year. And I think you just need to understand what you're trading and what sector it is and see how that is benefiting you. Kind of my read on the market is that the indices may not tell the whole story as we go through 2026. And I said specifically, I think the SPX could be a slow mover while many stocks under the surface could do exceptionally well. So don't judge everything off the index. I think we're going to have to emphasize individual stocks going forward with kind of an understanding of what the indices are doing and kind of which ones are doing it, because I think we're going to see everything kind of doing their own thing. So take it case by case. And so this is kind of what I'm saying. The mega caps are mixed. Each of them is performing based on kind of like what their narrative is. I mean, all of them are on different places. Okay, so again, we can't really trade anything as a block right now as far as that goes. The AI theme is still debated, but I do think it's coming back. I don't think this is over and done because, of course, this is here to stay. But I think that there will now start to be winners and losers. If you guys think about the data centers, TSSI, man, that thing got trashed, but APLD is doing great. Wolf, as far as one of the power plants, is doing great, but Galaxy got hit down. So yeah, we're going to start seeing kind of this divergence as far as the order flow and kind of what's doing well or what's not doing well. And as a part of that, you don't have to stick with the AI stuff. I think there's a lot out there that's working. And as I said, I think rotation is really going to be the name of the game in 2026. Find out what's working, stick with it, and then when it stops working, kind of look around for the next opportunity. And this just kind of goes to show here are some of the names that used to be doing well, or at some point were doing well, and now they're not. They got kind of hammered. Maybe some of them are coming back, but kind of not doing great. But then over here, we've got some serious winners. So again, not everything is working. We have some really good winners. We have some losers, and then we just have to kind of figure out how these things are moving around. I don't often get comments that I'm going to post publicly on stuff like this, but this is from YouTube. And Insider was saying my favorite stock market meteorologist. I actually kind of like that. So that was just from a couple days ago. I thought, that seems fun. I'll put that out there. And that's really what my YouTube videos are about. My weekly updates are just to kind of give you guys an idea of what happened for the week and kind of what I'm seeing going forward. So yeah, meteorologist, kind of a good idea about that one. Okay, small caps. This is something I actually picked up this morning. Sorry about the clarity. I know it's a little fuzzy, but that's the way I got it. And you guys know, anybody knows me, I love trading the small caps, and I think we're actually in a pretty good environment for the small caps. Obviously 2020 was absolutely bonkers for the small caps, but then they went into hibernation. Once the bubble popped, small caps were just no good. And then even when interest rates started coming down, there was a little bit of activity with the small caps, but for the most part, they didn't really work. But now, over the last year or two, the small caps have been working quite well. And I think that we're going to continue to see the small caps do pretty well. You can see things like the earnings growth. You can see that as of 2025 is on an upswing and looking pretty strong. You can see forward earning per share looking pretty great. I mean, that's a big notable thing. And then even stuff like this. We know that the Fed, with their dual mandate, they're looking at inflation and they're looking at the jobs, employment, and stuff like that. Well, for a long time, Jerome Powell kept saying it was about inflation. Really, really concerned about this. Well, I've been saying I don't think inflation is going to be the problem. I don't think the tariffs are going to do it. I think interest rates have kind of done it. I think there's enough stuff out there that's kind of been taking care of inflation. And this was posted today that from Rick Ryder of BlackRock says that inflation no longer Fed's main worry. And that reinforces what I've been seeing. And we actually had a cool CPI today, and it shows that it's basically yesterday's problem. However, the labor market weakness is now what the Fed's bigger concern is, and that recent strong economic growth has not translated into jobs gains, and that the Fed is likely going to be watching this. Now, this can be two things. Bad news is good news because, say, perhaps a weak labor market means that the Fed is more likely to cut rates, and the market likes that, so that's bad news is good news. But we're going to be walking a delicate tightrope here because at some point, bad news is bad news, okay? And we don't want the bad news to get too bad. And I think that's where, because the unemployment rate actually went down this week, and so people would think, oh, does that mean they're not going to cut? Well, I think we're still going to cut. And that's partly because we know we're going to get a new Fed chairman, and Trump's doing his darndest to knock down interest rates. So I'm pretty certain that interest rates are going to come down kind of no matter what. And so we don't necessarily need a super weak labor market in order to get interest rates down. What we want is to make sure we don't get too weak of a labor market, because then, as I said, bad news is bad news, and then the market will suffer from that. So I think we could actually be in this sweet spot where unemployment kind of stays where it is, or kind of just oscillates. Interest rates are coming down. Inflation is not a problem. and we could be doing pretty well. And I think some of these metrics are showing that the small caps love this kind of environment. And so I think we're going to continue seeing some good stuff from the small caps. That's why IWM has been leading recently. MDY, RSP, all those areas have been leading. Some of the other things that are, I think, going to be bullish for the markets in general, for the economy, for the small caps, is some of the stuff coming out from the One Big Beautiful Bill. Now, I've kind of read a bit some about this, but some of the just the basics that are coming out of this is that we know that Besson's been talking about large tax refunds for taxpayers. He's been out there talking it up and all that kind of stuff, and it's due to the One Big Beautiful Bill. Okay, so what does this actually mean? Well, it's going to be retroactive because they want this to kick in for 2025. If they can reach back and give you some more money, they're going to want to. That's what politicians do. They're going to want to give you more money and say, hey, you should like us. So they pass this in kind of mid to late of the year, but they're going to make sure that this is backdated, and that's why we're probably going to be looking at some lump sum refunds, most likely to boost the economy. So think retail stocks. Think American Eagle, Abercrombie and Fitch, Under Armour, Nike, some stuff like that. They've been moving a lot, but I think ideas like that and consumer-facing things. So kind of look around for there. And then also going forward, they've said that Americans can adjust their withholdings to receive tax savings, increase their take-home pay and future paychecks. Again, think about what Trump's trying to do. What is Trump and his administration trying to do? Trying to goose the economy. They're trying to put more money out there. They're trying to keep this thing going. So that's why it's like, go out there, go shopping. I think that's the whole idea. They're trying to spur the economy, keep interest rates low, keep those credit card bills low, and just go out there and get this economy going. Other factors that could be beneficial. Affordability has been a big thing that everybody's been talking about there. It's a big political football. I'm not going to dive into that too much. The only thing I want to say is that mortgage rates are near a 3-year low. So those have been coming down as well. Definitely we can see the peak, and it's been coming down a little bit. Generally, this should be helping people. Now, on the flip side, money supply continues to go up. M2 money supply is actually continuing to increase. So we kind of have costs, input costs going down, but money supply and money flow continues to move up and accelerate. And we know that the Fed is basically doing QE out there. They're not really calling it QE. They never really like to, but we know they're doing something out there to kind of help, get some stuff into the economy. So we got that going on too. And then gas prices are the lowest since 2021. Again, all these things are trying to make sure that Americans can spend more money out there and spend it on things that count, as opposed to kind of all of your input costs. And then here's the thing. Now, again, we are traders. We're here. We're trying to make money. We want to understand what is going on out there in the political landscape so that we can understand where to put the money, why things are doing what they're doing, and not fight the market too much. Okay, so take your politics aside here, but I think what we need to do is understand kind of what this administration is about. And I think for the most part, if you like him or hate him, I think you understand what he's about. We want him. He wants to come out. He wants to end with a high note. I think he's concerned about his legacy. He wants to be, looked good upon. He wants accolades. He likes praise. He likes all these things. So how is he going to do this? He wants to make people happy, and he's willing to buy it, right? He's willing to put the Trump checks out there and stuff like that, and the Trump stimulus stuff. So let's just understand what we're working with and go with it, and understand where this is going to come into play. And so what does that really mean? Well, he cares about the stock market. I know he said he didn't like a few months ago, but he does. He wants the stock market up. Okay. He wants the economy strong. He wants this thing to be good. He wants to be good, known as a good president, all that kind of stuff. Okay, so what's he going to do about that? He wants business to be thriving. He's trying to get as much stuff to come back into America, to reshore, to onshore, to come back here. Hey, build it in America. We're going to tariff you if you don't. Better or worse, that's what he's trying to do. Affordability. Amazingly enough, we've been seeing some stuff actually out from Trump and the Trump administration that even surprises me about what he's been saying. That seems like, he's kind of actually knocking around big business a little bit and saying, no, you can't do this, or we want to do something else. So I thought that was kind of interesting. And he's trying to get a stronger consumer because, well, a strong consumer is a happy consumer, and that is what America is based on, is consumerism. So we're trying to get that engine going and make sure that people are lifted up like that. So how is he going to accomplish this? How is their administration doing this? Well, we just heard this week about the credit card rates. Now, we were talking about this inside of the Moxie room, and There are a couple layers to this, and just don't want to go too far into it. But J.P. Morgan Diamond came out and said, actually lowering credit card interest rates to 10% may not actually be good for the consumer. Partly because if the credit card companies, if they can't make enough money or protect their risk on subprime borrowers, then they're not going to borrow to them. So people who need credit cards may not be able to get a credit card. There might be a lot of things here, some unintended consequences. I'm not here to discuss that, but it is interesting to see something like that coming out. Okay, cheaper oil. We know that cheaper oil has been a thing. Drill, baby, drill, better or worse. Okay, we got that going on. And now we got the Venezuela thing. We kind of know that Trump has been trying to send oil companies into Venezuela. So there might be something there. And remember, cheaper oil helps the economy because it means that your input cost is lower and things can thrive. Business can do better. People can spend more money traveling, doing stuff. Airlines benefit from cheaper oil. We just know that cheaper oil is generally better. Okay, so that's kind of what's happening. Interest rates lower. We know he's been banging on that one. We know that thing. And then another interesting thing, and I'm going to talk about this one later in the presentation about our really, really good trade on the home builders, but him coming out and saying no corporations, no big corporations to buy single family housing, which I believe right now stands at almost 30% of the market. The corporations like BlackRock are basically 30% of the single home market, which, yeah, on the surface seems like that sounds like a good idea. Maybe we should get them out. Maybe they should stick to condominiums and apartments and stuff like that, not single family homes. Okay, maybe that's something we can get behind. I thought that was interesting. First year full depreciation. This is, I think, part of the one big beautiful bill. This is another, it's like a tax benefit, but it's one way to incentivize business to come in because you can take all of your depreciation, slam it into the first year. I don't think anybody's ever done that before. So that's kind of a novel idea to get business come in here. Immigration, obviously a hot topic, but that is something where, maybe if we're trying to get more jobs and kind of up here and keep the money in America, that's something I think they're trying to work on. Okay. Electricity costs. This was a new one. I think Trump just talked about this either today or yesterday, and he is kind of addressing the whole data center situation where all these data centers are gobbling up electricity and it's causing electricity costs to go up. And he's trying to say, hey, look, we maybe need to have a two-tier system. Data centers, you got to pay your own rate or you have to provide your own electricity. We don't want that to affect Americans and consumers. Okay, great, trying to keep costs down. Okay, so if you kind of understand these things, it kind of lays a backdrop for why the stock market might be doing what it's doing. Because if you kind of look at other things or politics, you might not understand this. And so that's why I just wanted to bring this up and say the stock market looks like it got a lot of tailwinds that it could actually keep things going and keep the small caps working too. And then here are some statistics that I like to look at. You guys probably all know that the first 5 days, the first week, the first month, there are a lot of statistics about how does this go and how does the market go. Well, it feels like we got really close on this one because if you guys remember, I think it was Thursday that the market started coming down. But market performance statistics like a strong start to the year. It's the January effect. Everyone likes to start on a good note, all that kind of stuff. If the beginning of the year falters, it could spell trouble. So what does that actually look like? And fortunately, the SPX actually closed on its fifth day at 1.11% up. So it's like it just barely made it because there is a big difference between 1% and just positive. And if you look here, the first 5 days of January, if it's over 1%, there on average, we have a 19% gain. Okay, this is also after a back-to-back 3 years of greater than 15% gain in the market. So we could be on our fourth year of a plus 15% market gain, which is crazy. Very exciting, very crazy, but this is nice. This is good statistics that we like to see. Compare that to if we were down for the year. No good. Okay, so we don't want that. And fortunately, we actually closed, 1.11. And then the likelihood of this to happen if we close above 1%, about 87% likely that we're going to be closing, significant double digits for the S&P. So momentum begets more momentum. Okay, whoops. But of course, we know this isn't going to be all roses and sunshine and all that kind of stuff. There's always going to be some noise. There's always going to be turbulence. There's going to be something at some point. And Sam Shamus, one of my coworkers here, the other trader, pointed this out to me that the S&P is at the 618 retracement from the tariff tantrum lows. Now this isn't like baked in that this is absolutely going to be the top and this is where we correct from. It is notable that we should be aware of that. It could end up being some resistance. The market might have to digest it and kind of chew through it, and we could get some noise and some turbulence in through here. I will also point out that the Moxie indicator on the daily chart has been below zero. So what that is telling me is that energy and momentum is negative. It's below zero right now, despite price being over the 50 and price moving up. This could be a problem. I will point out that when we had our tariff tantrum lows, you can see we also had an inverse trampoline move. So what we have to do is look at the lower time frames to continue seeing if this is going to be a problem or not. But I'm just kind of putting out there. I would love to see this thing go green again and get positive, but we're going to just have to see how the market does it. So that's kind of why I've been saying the S&P might be kind of slow, especially to get started. It might be kind of slow. So what we have to do is look around and actually use individual stocks and maybe some other metrics to really gauge the market, because the SPX is kind of in this sticky situation where it's got a couple things working against us right now. So I'm not so sure that the market's just going to like pull back and drop real hard right here, but I think it's going to have to take some time to chew through this, and it may not be the greatest barometer right now to guide us. So we have to kind of look at other places. Oh, and then Pete, yeah, hopefully you don't get embarrassed, but yeah, thanks for being your first week in the room, and I'm glad you thought it was fantastic. And you guys, if you aren't familiar with me, you're going to see this a lot. A lot of people comment on my teaching style. That's what I do in my room. I teach a lot. I'm always educating you guys. I don't just throw out trades. I'm always on the mic talking, teaching, showing you guys how to do this so that you can learn how to do these things too, and actually work with the tools and the metrics or gauges that I actually work with too. As far as when this correction or when this pullback or when some weakness might show up, this is fund strat. This is Tom Lee's fund, and they're kind of projecting that probably late summer might do it. I think that makes sense because of course that's seasonal weakness. We know that kind of August, September, October tends to be a little bit weak, and so I think that just putting it out there, maybe we should be prepared for that. I don't want to see too much weakness now. I'd rather see it later. Let's kind of get this year going and working, and we'll see about it later. To make that kind of work out, we can see here we got some seasonal weakness, August, September, October. And then this is flow of funds. You can also see that the big funds, their flows also tend to come down August, September, October. So just reinforcing the seasonality of, hey, if we're going to get a big correction, if it doesn't surprise us earlier, and we haven't had a big correction over the next few months, then maybe kind of be careful around that time. We'll see how it happens. Just kind of throwing that out there. All right. Again, with the market tailwinds, we saw that the market and a lot of things came down November into December. This is the 20-day breadth, 50-day breadth, 200-day breadth. You can see that there was some weakness kind of coming into the end of the year here a little bit early. But since December, you can see we popped up again. Didn't really do anything into the end of the year from there. But now you can see here, actually probably should have put a current one on here. These are higher. We're actually doing pretty well in the 20-day. You can see we've been regrowing on the 50-day, and even the 200-day is starting to work out too. So really, I don't see any problems here. This is all looking pretty good until it gets overbought. We're getting close to overbought, but we've still got some room to go. So I'm pretty happy about what we're seeing here. Remember, new Fed chair, dovish, rates coming down. That should be a tailwind for the market. Breadth has been good despite those high flyers getting hammered in November. And inflation is coming down despite tariff concerns. Now, again, wild card, Supreme Court. I keep joking around. I don't know who really got all this thing working. Like everybody thought that last Friday the Supreme Court was going to talk about tariffs. They didn't. Apparently, they have another one, I think, coming out tomorrow. We'll have to see. And then there's another one coming out after that. So who knows? We might get just surprised whenever the Supreme Court does its thing. Okay. So yeah, politics. As I said, we do need to know what the administration is doing. This is true for Trump. This is true for Biden. This is true for any administration. We need to understand what the politics are, what the administration is about, what are their big things, and where are they putting laws and rules and emphasis? How are they putting their hand on the scale, and where do we need to know for the money? So like, maybe you don't want to be investing in Chinese drone stocks right now because they put a ban on that. Okay, so we want American drone stocks. Great, let's go do that. They are doing awesome, and we're succeeding from that. We took a pretty nice trade on ONDS, and then back before everything fell, we were doing great with UMAC and RCAT and a bunch of other stuff like that. But again, if we just understand what's happening here, as part of America's tougher stance and desire to become more self-reliant, think about metals or rare earth minerals or energy, nuclear names, stuff like that. Now, I know some of them aren't great, but they're kind of coming back a little bit. The Trump administration is taking steps to ban and encourage various industries. So just understand what's out there and be on the right side of that. Okay. We got rockets, aerospace is doing great, robotics is doing great, and generally defense is feeling the benefit from all this. And so it's up to us, and what we do in the Moxie Room is to seek out the biggest opportunities. And we do this then with a technical eye. We don't just say, oh, we think this sector is good, let's just be in it. No, we actually have to look for setups. Case in point, if you look at AVAV, this was, again, another one of those January effects. I mean, look at this thing. It was going down and then sideways, and as soon as January 2nd hit, boom, this thing exploded. But there was a setup, and this is what I call the Moxie trampoline move. That's when price is below the 50, but the Moxie indicator is above 0. And we've got a fair amount of these showing up in some other sectors that we are hot to trot about, and we're doing pretty well with, and waiting for them to pop off. So, but yeah, you can see, even coming from the end of the year into the new year, there was a technical setup using the Moxie indicator to show you that this kind of thing is here. And if you were quick about it, that right there, Friday, you can see Friday was the first turn. That was your defined proper entry if you wanted this. And then look at the move after that. And it's all because of the Moxie indicator and the rules that I give you guys. And then you can see ONDS, nice breakout here. This is a weekly chart. And yeah, we captured a good chunk of that on ONDS. So really, really big mover as far as kind of the drone space. Okay, home builders. This is another one. This is another one that I've been tracking for quite some time. Interest rates coming down. Shouldn't that be good for housing and home builders? Yes, it was initially. This was kind of the first move. This was the first idea with rates coming down. And we actually, I think the market knew this was coming as far as interest rates. And so they front loaded this and actually jumped ahead of interest rates. So this is where it was a little bit tricky, because as interest rates were being lowered this last time, XHB and Nail, the home builders, were actually pulling back. And I think this is one of those things where it's like, buy the rumor, sell the news. The market participants, they think ahead. They think 6 months out, and they know things are coming. So they run them up in ahead of that, such that when you actually do start getting interest rates, this thing was coming down. And for those who are not trained in this and not quite experienced in kind of these mismatches, they'd be thinking, oh, rates are coming down, shouldn't this be up? And then they get stuck in something like this. Well, I know that rates are still generally coming down, and so I've been waiting for this. And those of us in the Moxie Room, we have been loading up a position in through here, and now I think it was right about there. We got a giant move over the last few days, and I'll talk a little bit more as we go this. But yeah, I've been seeing this coming for weeks, and we've been campaigning on it and working out something like this. So yeah, that's kind of what was talking about here. And then yeah, just the other day, I know we got some more new people in the Moxie Room. And so I was on the mic just teaching again, doing my thing. And so Carrie was kind of saying thank you. And then Chris, appreciate it. You're a landscaper. So you're kind of here right here during your off season, learning a lot this week. And that you've been swing trading on and off for 20 years. And that the Moxie indicator has been the missing link in your trading. I really feel the same way. The Moxie indicator is really what revolutionized my trading and got me from just churning my account to actually understanding and getting some traction with this thing. And I know a lot of other people in the Moxie Room feel the same way, because it's the Moxie indicator that really made the difference. So yeah, hopefully you guys find that valuable too and stick around for it. Okay, here we go. This is how we handle stuff, okay? Because I didn't see this coming. Did anybody else see this thing coming out of Trump talking about banning institutional buyers in single family homes? No. And as I said, I was campaigning this. I was adding positions all over the place. And then I finally called the bottom. I was like, guys, I think it's here. Look at what this thing is doing. Home builders are looking awesome. And then the very next day, he comes out and says this about banning institutional investors. And I'm thinking, okay, I could probably get behind that. But the market's probably going to hate that, because it's removing a giant buyer. And sure enough, all the stocks went down. I'm like, oh my gosh. Am I going to have to get out of this trade? I've been building it for weeks and I'm going to have to take a loss on it. Like, what is going on? But I stayed with it because it didn't It didn't break down enough. I still kind of thought, well, maybe this is noise. We'll just have to see. And then lo and behold, what happens the very next day after he says that? The we get them coming roaring back, absolutely roaring back. And what it do? It actually dipped even lower, probing for weak hands and stop losses, only to then just jack that day on bigger volume. And I was like, huh, okay. So this is how we can trade through some of the political noise. Okay, the charts, the technicals, the overall theme still worked out despite what it felt like would have been a derailing moment for this sector. And this is very much the kind of stuff that I applied to the tariff tantrum lows and nailed that 2000% trade. Okay, so the setup was still there despite the Trump news. And this is the kind of stuff that we're trying to work through using the Moxie indicator, using technicals, and using the stuff that I teach you. And now Nail and XHB is like way up there. I mean, it was still even up today. So yeah, pretty wild. And just showing you again, look, there's the Moxie price trigger. Right on cue. Right on cue. How amazing is that? It actually happened the first day that this thing exploded. So good timing on that one. And then I'm thinking, okay, if the home builders are rising, what else is going to be riding this wave? Lowe's and Home Depot. I had a couple traders asking me about this. And we looked at them. Home Depot is doing better. It's kind of coming back. But if you're going to pick one, I'd go with Lowe's. This is Lowe's. Looks awesome. So yeah, if you want, I think it's probably up even higher now. But if you want to, I think that is a good vein to mine in if you wanted to keep looking at something. I think these are going to be good trends. That is a really, really good setup. And once again, look, there's the Moxie price trigger. Right on cue. I mean, you just can't get better than that. There's your squeeze. Everything's working out pretty nicely. And then as other things, other sectors that are kind of showing that the economy, or at least industry and the stock market, are doing pretty well. We got some wind at our back. XLB doing great. XLI doing great. Transports also doing great. So these are all things that are basically, if the economy is doing well, these sectors, these stocks are also going to be doing well. Yeah, and then Adrian, I gotta laugh. I love the traders that are in the Moxie room. We've got a lot of energy there. We got a lot of fun people who are very type a lot, very active. And it's like when Nail was exploding, he's like, "Look at Nail, what the heck is going on?" I was like, "Good trade, it's working for us." So yeah, here's transports. You can see here are the tantrum lows. Obviously, everything came down, everything went up, but then look what's been happening. Okay, it's still going. This is good. This is the kind of stuff that we want to see. That it consolidated for a little bit and here, and look at this, it just exploded. So really, really good stuff as far as the transports are working. New highs, maybe a little extended, but still new highs. And then how about this, Dr. Copper? We know the AI data centers, of course, they're consuming metals, copper, stuff like that. But copper is also indicative of how is the economy doing, how is industry doing, how is building doing, how is the economy expanding. And we got a lot of expansion going on. So copper continues to be just cruising along. Again, maybe a little extended here and there, but as an overall metric of kind of the economy and what's going on, I'd say that's looking pretty good. Cannabis. Okay. This is where we're going to start getting into some of the sectors that I'm looking at, some of the longer term stuff. Once again, if you think about kind of the political apparatus or the administration, what's going on out there, if you think past in the back, we know that cannabis went crazy during the 2020 bubble, partly because, the Democrats are kind of okay with cannabis, and we thought they were going to legalize it, or all that kind of stuff. That the Democrats, the liberals, really had that narrative for cannabis, but they just didn't get it done. Nothing really actually happened with it. So it went because, well, everything was going. So cannabis was really a good thing then, but it's been dead since 2020, since that bubble popped. And we had the occasional fake out move at any time a politician or somebody would talk about the reclassification, scheduling of it, but it just never happened. It was always kind of like a pipe dream, kind of pop and then flop, and just never really worked. And then Trump came out and actually did it. So this is kind of one of those funny things that, I don't know, you wouldn't have expected Republicans or the conservatives to do this, but they reclassified cannabis. Okay, cool. All right, so great. Let's do it. As part of that, though, this really was the ultimate buy the rumor, sell the news. I mean, you can see here, I actually have a line. because I was just about to actually put on a trade or talk about putting a trade on with MSOS. I was like, hey guys, this is our setup. This is looking pretty good. And so I put a line there as a paper trade. I didn't know that there was news coming out about Trump signing it, and then this thing just exploded. I didn't take the trade or anything else like that. I said, look, it's a little crazy. I'm going to just wait. But this was when the news came out that Trump was going to sign it. And then literally the day he signed the paper to reclassify it is when it then came right back down. I feel sorry for anybody who got caught up in this. If you were one of those who got caught up in this or was like, oh my gosh, Trump is signing the thing, that's bullish. And if you bought on that day, please sign up with the Moxie Room. I can help guide you through this kind of stuff. Make sure that you learn about things like this, like the buy the rumor, sell the news, and just some of the quirks and phenomenons that happen in the market out there. Okay, this is a little bit predictable if you've been around for a while on how these things work, but ultimate, buy the rumor, sell the news. So yeah. Now that being said, we are in MSOS, and it's been doing pretty well. It actually broke out yesterday, pulled back today, broke out yesterday. Generally, I think this is looking good, and the reason is because I think now the politics have changed. They are working on rescheduling it. That means banks and financials can come into this. It's generally legal. It can be official now at this point. And so just like we saw a potential setup here, we're seeing the same setup here on a monthly time frame. Think about that, a monthly time frame. When these things get going on monthly time frames, they're looking really, really good. And that's why I think this is our second opportunity. I think this is actually legit because there has been now structural change out there. And you can see here, even on the weekly, there was your setup, but it failed. And we're having another setup. You notice that these things where I point the arrows at, they're exactly the same thing. These are the technical structural setups that I repeat and I show you guys over and over and over. And that's how you can learn and kind of work through some of this noise in the politics about how this stuff works. Okay, so I think we've got the news, we've got the narrative, we've got the structure, and we have the technicals, and I think something's working out here for us. Okay, how about Bitcoin, crypto? All right, this is going to be kind of the exciting area. Hang on to your hats, because crypto is the wild, wild west, especially after, unfortunately, I think a lot of people got hurt up here. Bitcoin basically broke out, and then broke down. And, a lot of people they're burned. They lost a lot of money. All the people who were over leveraged just got swiped. And they don't know if they want to come back in, or it's taken a long time for this start to build up. And once again, like I said, a lot of these things, the institutions were not going to move them in 2025. They're going to let these things die. They're going to let them sit here. They're going to write them off their books for 2025. They'll start fresh in 2026. And that's exactly what they're doing. Okay, we're starting to see a lot of activity into the crypto space as of 2026. And for me, you look at this on the daily chart, there's a double bottom right there. And I'm starting to see that this thing's starting to turn up. Okay. My arrow's in the wrong place, but I'm pointing out there's a squeeze. Okay. There's a squeeze here. We're into support, all this kind of stuff. And at least for the initial move, I'm targeting 100. I moved my charts. All my lines got moved. Sorry about that, guys. This line was supposed to be right here. It's supposed to be right there at 105,000. I'm targeting 105,000 for Bitcoin as kind of just the first move. We'll have to see what happens after that. I kind of figured there's probably going to be a pullback after we reach that. But I think right now we are setting up for a pretty robust pop to, I'm targeting 105,000. We'll see if I'm right. We'll see if it goes. But I'm seeing a lot of telltale signs that are actually doing this. And once again, politics and all that kind of aside, the Moxie tools and the Moxie rules are what's getting us into these things. And those of you who are in the Moxie room know exactly what I'm talking about. Those of you who aren't, I welcome you to come in and check this out because I want you guys to understand, I'm not just doing this. I'm not shooting from the hip. This isn't just gut feeling. I can actually legitimately point out a lot of things that are happening structurally that I think demonstrate this. And so I'll give you guys a little freebie. So anybody out there who's watching on YouTube or X or something like that, here's a little freebie. And we'll see if it actually works. But I'm in, so at least I put my money where my mouth is. So MSTR versus Bitcoin. This is MSTR weekly. I think it is extremely oversold. And we've gotten some good news from MSTR and then just Bitcoin in general. I think we're going to start getting a move. For those of you who are in the Moxie room, you guys know why I'm targeting what I'm targeting, at least from a moving average standpoint. The weekly 21 tends to be a pretty good target. I think there's a big move that is available to go there. So MSTR on average moves about 3x of Bitcoin. It's leveraged basically because they own so much Bitcoin. And so the bounce that I'm anticipating on Bitcoin is about 15%. And this also, so 15 times 3 is 45. This 45% move lines up with the weekly 21, lines up with this price level that I have right here anyway, and then lines up with the 45 and 15% move that I have. So all of this is really lining up, and it's giving me some confidence as to what I'm seeing in through here and why I think this move is going to happen. And of course, Ethereum and BMNR are going to move in concert. I don't really know what their targets are going to be, but I'm going to be following Bitcoin and MSTR to help guide me as far as like when I need to get out of Ethereum or BMNR on this particular move. So yeah, there's your freebie. We'll see if it works. And I think we're kind of in process right now. Now that being said, this is a little teaser here, but if you guys are interested, if you want to see this trade, if you want to keep coming with me on this trade as we go along with it, this is what the Moxie Indicator Mastery Room is for. It's the trading room that I have. You can find me over at simplertrading.com, and I think it's actually slash Moxie, it's later, was it Moxie, something like that. We have that. But what I'm trying to show you is I have proprietary signals, and I've discovered these over the years. Like, this is one benefit of you into the Moxie room. Thank you, Lorna. Moxie Market, slash Moxie Market. This is one of the benefits of coming into a room like this. I've been doing this for, professionally, I've been doing this for 20 years. Yeah, about 20 years. And not professionally, I've been doing this almost my entire life. I've just been exposed to it. I've been around it. I'm always learning, still learning new stuff. New products are coming out. And this is one of the more recent things that I've really developed and learned, and that I do communicate to the Moxie traders and people who take the courses and stuff like this. I am seeing some really, really interesting, very legitimate stuff about these signals that are really, really showing up in the crypto space. And so that's what's giving me the conviction I have for this setup. So I would love to be able to show you guys and teach you guys this kind of stuff and what I'm seeing. And these kind of structures are the same things, the same exact signals that I'm seeing for the tariff tantrum lows. So I don't know. I'm kind of hoping that the kind of move that we saw for the tariff tantrum lows is something that we start to see in the crypto space. So time will tell. Okay. Now we can move on to the next kind of hot topic. We've got silver and gold. Now, I am no way going to try and call a target or try and call a top yet on silver or gold. I've had a couple trades on gold. They've been short trades, actually. We've kind of gone in there surgically and gotten some good trades with it. But there's no way I can tell where this thing is going, okay? It could top today. It could top 3 months from now. No clue. But what I do want you guys to know, a little gentle reminder, that parabolic runs don't last forever. It's kind of like that old phrase, the bigger they are, the heavier they fall, something like that. The faster, the faster that these things go up, the faster they come down. I just want you guys to know this and be safe about this, because if you're trading these things, ride them until the wheels fall off, but understand that when the wheels fall off, at least for silver, they fall off in a big way. Okay, so just understand this goes back to the 1980 as far as this one. This was a vertical move. Now I also understand this move in the 80s, the move in the 2000s, 2010s, and the move now were all for different reasons. It could be argued that the move now is actually for more legitimate structural reasons. We have solar panels, we have industrial, we've got a lot of things that is needed, that silver is needed for. But we still can't help look at the charts and say, we've seen this story before. When they go parabolic, how long do they last? And they could squirt. They could keep going a little bit higher, but just don't overstay your welcome. I think that's really the biggest thing I just want to show you guys here, is that it'll go, but then probably when it's time to hit the door and hit the exit, everyone's going to be running for the exit. So just be careful out there. Keep rolling things up, take some profits. Don't keep getting heavier and heavier as it goes up. Just keep your risk reasonable, okay? Because I wanted to show you a little bit of a history lesson and just show you, like, we are up here, and it's not that it's $75. It's just how big has this move been, and how big has this move been, and how big has this move been. Okay, so I think we could be a little bit in late cycle. If you understand that, then just know, kind of keep one foot out the door. And then the other thing is, as this one, it's all getting hyped up, everyone's all excited about it, whatever. It's not going to last forever. And so what's the next opportunity? always keep your eye on the next opportunity, and just make sure you don't get too caught up in something, because at some point this trade will be over, just like any trade is over, and you got to look for the next opportunity. And then gold. Now, gold's a little bit different. Gold could be a little bit more forgiving whenever it tops. Again, I don't know when it's going to top. I'm not going to try and call that. But if you look historically, it too can run kind of parabolic. But you'll notice it does tend to kind of pop up in a range and then fail when it's over. And same thing here. It kind of pops up here in a range, and then that was a continuation. But you can see here it's kind of in a range before it fails. And even here, it came up and it's in a range. So gold is a little bit more forgiving, but I would still be careful about whenever this thing does kind of top, and make sure that if you think it's going to keep going after the consolidation, because we've had several stair steps, but you want to make sure that it doesn't then fail or fail or fail in through that area. And again, this is getting kind of up there. Of course, keep going. These things, we'll see how long it goes. But just understand that these things are getting pretty frothy up there. And I do love my Keltner channels. So note that the Keltner channels, we are wildly outside of them. And again, price does not really like to be outside of the Keltner channels for too long. So just some context out there for you. Yeah, Steve, in the 80s for silver, was it the Hunt brothers? I remember the story. They tried cornering the market for silver. So again, there are different reasons that silver is running this year, but chart's a chart. Just think about the tulips. When things start going parabolic, they don't last forever. Okay, and then I'll just kind of leave you guys on this one. Once again, I do not know where the top is. I don't know if there's going to be an inverse correlation exactly. It did happen in 2020. We'll have to see if that repeats. There could be kind of interesting, but I do think that whether or not this comes true, I think it's fair to say that gold is very high, and I think Bitcoin is very low. So again, I don't know if they're going to completely work inversely, but I do think that there's some opportunities here. Again, look for your next opportunities. Stay focused on one thing, but make sure you kind of broaden around a little bit too. So I think crypto is due for a big bounce, and it is just food for thought. If the precious metals happen to top in the near future, don't be surprised. And we'll see if actually Bitcoin and crypto actually start going up as precious metals come down. If they both go up, hey, great. Keep the party going. Now you got two things you can trade. But if we do start to lose the strength in precious metals, but Bitcoin's doing well, then I just want to kind of show you that I've at least pointed it out here, and hopefully you've been able to do something about it. Okay. So that being said, if you guys are interested checking out what I do in the Moxie room, we've got some specials here, and want to show you some of the really happy people in through here. It is a fun place to be. I am chatting away all the time. I'm on the mic an hour and a half, 2 hours sometimes. It kind of depends on how long we've been talking, and we really have a lot of fun people in the chat. This is just some examples. We got some of the main players, Brighter Side, Emil, Larry. You guys kind of talk a lot. I love it to see you guys out here. You'll see that a lot of them talk again about my teaching and what I do. So if you guys want more than just an alert service, if you want somebody kind of who helps guide you through these things and helps show you how to do this, and how to actually read charts, how to use the Moxie indicator, how to just look all this stuff. I look at all the stocks that you guys asked for, and we watch them day in and day out and actually talk about them. And I guide you right into or right out of some trades, and we talk about this stuff. But yeah, great teaching, education, analysis. Ernesto, big words, but thank you. Visionary right through there. Larry, I know you had a couple good trades in through here. AMDL back in the day, that was a nice one. And I was like, oh yeah, that'll pay for it just a few times. And then anybody who likes to day trade. Scott was even saying that the Moxie indicator on short time frames was really good. So he's using the 2 minute, and he saw it coming using the Moxie indicator. So again, I teach a lot of swing trading, but I also teach day trading, and the Moxie indicator is great for day trading as well. And then surf fishing, he was kind of commenting on leverage stocks. That is another big thing that I work with, are all these newfangled single stock leverage ETFs. And I'm working along with that. And then Ritu, he was saying that all his life stayed away from stocks because he didn't want to lose money, but he's glad he joined my session once he got into this business. So this is some of the stuff that I'm really trying to help you guys with, and make sure that you feel comfortable when you step into the stock market. You've got some structures to work with this. So I'm here for you. Okay, I really put a lot of time and effort into this, into the presentation, into my room, and I'm on the mic a lot there for you guys. So what you can see here, we got the live alerts. I give a lot of education through that. Make sure you guys are up to date. I know a lot of people can't be at their computer all the time, so I try to give good guidance as to what's happening so you can kind of expect what's going on with the market. Interactive Q&A. Guys, anytime I'm on the market, talk to me, ask questions. Let's see what's going on. We'll talk about the news of the day. We'll talk about some fun things. I'll show some pictures if I went on vacation. We do airplane stuff. I'll show you some loops and rolls. It's a good time, you know. And summertime, we're out there boating and kind of doing some fun stuff there. And then lots of member resources if you guys want to step in and kind of get up to speed. There's a lot of stuff to just check out there. So here's the special. This is something kind of new that we're doing. So listen up if you guys have been tuning in for a while. This is going to be the special thing. If you're interested in coming into the Moxie trading room, there are two ways you can do this. The first one, which is kind of the standard one, you can just check it out. $7 trial for 30 days. However, if you like it and you want to actually sign up for the room, you're going to be renewing at the standard $247 a month. Okay, so you can kind of take your little feel, see how it goes, and then you'll be paying a little bit more if you're like, man, I love this. Why didn't I get a better deal? Well, here's your better deal. If you want to take a leap of faith and you like what I've been talking about and you like what I've been doing and how I show some things and you appreciate those testimonials, the special we're going to be running. You skip the $7 trial and you jump right in for $197 as long as you keep renewing. Okay, so that's the special deal here. $197 a month gets you instant access to everything. Okay, everything we do, everything I do, all the material, jump right in, hit the ground running. As I said, I think we've got some good sectors that are starting to work up. I think we're seeing a lot of activity. I'm happy and excited for 2026. And I'm seeing some long-term trends that are starting to set up that I really, really want to just keep picking away at as they continue to go. I believe that there is even a bonus in here. Let me, I'll get to the bonus. I'll show you guys because there's even a sweetener bonus if you guys sign up for the 197 now. So we have, this is just kind of showing you guys, I'm on the mic a lot. I'm actually on twice a day sometimes. So if you guys need help, if you need support, if you want to feel like you're connected out here, I'm on the mic a lot. So Eric and Chuckle Cartel were talking about, been here a year and a half, best room ever. Love you guys, appreciate it. Glad you guys are happy about it. Let's see, I know one of these, yeah. Maybe the team, maybe Mirzik or Miranda, can you guys help me? What was the bonus that we were going to be doing? I know weren't there two classes that we were going to be including about this? I'm trying to think where that was. Oh, is that what we just called it? Okay, so I guess this is what it is. Choosing the right stock. That is the webinar class that you guys get a freebie bonus for. I even thought there was one more other thing. Yeah, I thought there was one more thing that we were going to offer in there. But either way, we want to make sure that if you guys sign up for the $197 a month right here, right now, you're going to get an extra bonus class, plus a few other, I thought there was one other thing. So whatever, that's the team setting things up for me. You know, I trade stocks, they run the promotions, but that's how we're looking at. So once again, if you guys want to just kind of, dip your toes in, check me out, see how it's doing, you can do a $7 trial for 30 days, but you're going to be renewing at $247 a month, okay? And no extra bonuses. But if you come in here, $197 a month, right here, right now, you get the extra class, and then you can just hit the ground running. And just so you know, if it's a little expensive for you guys, PayPal does offer credit, 0% interest for 6 months if you need to finance that. We want to make sure that you guys can gain the kind of access that you want. PayPal is really great for that, and they've been running this thing for a long time. Okay, so I know some people have taken this, and it's great. Hey, why not finance with free money, right? 0% interest for 6 months. And if you guys are interested, remember simplertrading.com/moxie-market. We got the logo down here, and then support. We got our phone number and our email. Okay, so gosh, I tell you, sometimes it is amazing how I make these things exactly an hour. I just make information and then it actually lands out to be an hour. I just don't even know how that works. It's amazing. So anybody have any questions out there? I know we've got people on YouTube and Facebook. I'm not seeing that right now because we're actually running this through a restream. But anybody in the room, if you have kind of questions, let me know. Oh, Woodstock. You haven't heard of? Oh, I was gonna say Woodstock. I know you. You should know all about the The elf shoe. Yeah, no, today I wasn't really talking about setups. Today was a market update, just trying to give you a big picture thing. If you did notice, when I showed the Bitcoin stock, there was an elf shoe there on the daily chart. So there is, crypto's got an elf shoe. And if you know what that means, I think we've got some good moves showing up. Let's see, what percentage of time do I devote to SPX 0DT? Honestly, my preferred is I'm a swing trader. That's really where I like to put my time. And right now the market's doing very, very well. So I really kind of keep myself busy with the swing trade stuff. As far as 0DTE, when the market gets messy and volatile, that's kind of the best time to get into it, to do 0DT, because either the VIX is up and we got bigger premiums, we've got more movement, and that kind of works. So that's kind of how I ebb and flow with the swing trading versus day trading. Is I like to day trade actually when I'm kind of low on my swing trading stuff, if I don't have a bunch of positions going, and if the market's kind of messy because there's just more movement and the VIX is up. So, but what I am happy to do, Woodstock, is that if you want more 0DT stuff, when I'm on the mic, happy to talk about it and teach you about how this works, and we can watch it and see if there are any opportunities as this goes on. To be perfectly honest, sometimes the subscribers actually come up with, they'll be like, hey, something over here is moving. Can you go take a look at it? And I'll be like, oh, yeah, I'll take a look at it. And then maybe we'll go take a trade on that. Or they'll ask me a question like, oh, shouldn't we be doing this? Or, hey, this is coming up into resistance. And I'll come take a look at it and be like, oh, yeah, that's doing that. So, yeah, thanks for the tip. Let's go take that trade. But yeah, that's kind of how it works for me as far as the balance on that. Let's see. Kanesha, what does the free session entail? I'm not sure what you mean for the free session, because well, if you're talking about maybe the $7 trial, you just come in for 30 days. You step right into the Moxie room and you get to see everything I do and what I talk about for 30 days. But if you like it, you'll just have to renew at the 247. So I don't know. Can you kind of elaborate on what the free session entails? Hey, Lulu, haven't heard from you in a while, man. Good to see you. Let's see, Bitcoin just had a launch up and it is going up currently, and I'm in that trade. It's a trampoline. Yeah, trampoline. I know you love those trampolines, don't you? Lulu, I totally agree. As part of that, have you looked at Coinbase? We also had a trampoline move on the hourly chart. So I think all of crypto is looking pretty strong right through here. So I don't know exactly what the theme of that's causing it to move, but the charts are there and I'm loving it. So yeah, you love it. This is great. I'm very happy about that. Oh, BW, let's see. You think she meant bonus session. The bonus session, this is just the stock, or sorry, a video. This is a pre-recorded video that I made. It's kind of like a miniature class. I think it was about an hour long or something like that. And it's to kind of get you up to speed. It's how to choose the right stock. Walk you through how identify quality setups, avoid the low probability and headache type stocks. So it's just a quick little something to kind of get your feet wet, understanding how do you distill 1,500 stocks into what might be good out there. And that's what I really try to show you guys is trade this, not that. Let's see, Steve, what about my comment on Fort Knox? Any thoughts on that? I didn't see this. Let's see. Oh, Trump said he wanted to visit Fort Knox. Crickets, since that news came out, wonder if Fort Knox was empty. Yeah, what did happen to that? He was talking about wanting to go visit Fort Knox several months ago, right? And I think they kind of got close, or did they have some of his associates go, some other people in the administration go? I don't know. I don't know what happened to that. But we're kind of at the mercy of politics, right? Don't we? If they don't want to talk to us about something, they just kind of drop it, right? Like, no, you didn't hear that. Yeah, good question. I don't know. What did happen with that? Yeah, what if Fort Knox is empty? Well, let's see. If Fort Knox is empty and we have been saying it's not, and we're supposed to have all this stuff, then I would imagine that if that got out and it was true, we'd probably be in a world of hurt, don't you think? Because if we're supposed to have all the gold and then we don't, then I don't know. Seems like a problem. So yeah, I don't know. Maybe, are they sweeping under the rug? I don't know. Or did wiser people say, hey, maybe we shouldn't bring a bunch of cameras into what's supposed to be the most secure place ever and let people see the secrets of how this thing works. I don't know. Could be a few reasons. I'm not privy to that. Yeah. Sorry guys, can't really say. I'm not connected to anybody. Stas, let's see. So were you asking if she was referring to this? Yeah, skip the trial. So once again, if you do this option, all you're saying is that you want to subscribe to the Moxie room starting now on a monthly basis. So you're going to start spending $197 a month now, and it just means that you're not going to do $7 for 30 days. So it's nothing about this 30-day thing. It just means like, hey, I'm good. Let's go because I want to try this out. And if you like it, it means you're going to be starting to save money from now into perpetuity because every month you renew, you're going to be saving about $50. And if you end up subscribing for what a year, you're going to be saving $600. So it could be one of those things where it's penny wise and pound foolish. You're like, oh, I'm going to save money because I want to check this out. But if you like it, if you come in and you actually like, hey, he's pretty good. I like the trades. I'm doing well. I'm succeeding. I'm learning. Well, you're going to end up paying $50 a month more for however long you're subscribed. So it's kind of one of those things where it's like, well, maybe you take a shot. In this game of stock trading, we're prepared to lose money. We make money, we lose money. And sometimes it takes money to make money. Actually, for stock trading, it takes money to make money. And so this is one of those things. Maybe you pay up a little bit more. And if you like it, you're going to be saving $50 a month for the rest of time for however long you subscribe. And $50 times 12 is what, 600, right? Please tell me my math is right. I'm here trying to present and think about multiple things at once. So yeah, hopefully that's right. Okay, let's see. We haven't been on the gold standard for 50 years. Yeah, Lorna, yeah, the gold. And maybe it doesn't matter. I know that we haven't been on the gold standard, so yeah, does it really matter? Not sure. Let's see, Beach Lady. Oh, good to see you, Beach Lady. Bitcoin at 105, what would that translate to BTCG? I don't know, but let me see if I can even, is it just BTCG? Yeah, what is BTCG? I don't know what that one is. Sorry if I should. Lulu, let's see. You can say thank you. Yeah, for teaching you how to trade. You were my first teacher, and I get it. Feel confident to trade now. I encourage you to check out TG. Thank you, Lulu. Man, that's a big one. That let me just show this to anybody else who's up there. I mean, yeah, look at that. So Lulu, that's great. I know when you first came into the room, you had a lot of questions. And I was happy to answer all those questions and really make sure that you felt like you knew what was going on, especially with the Moxie indicator. So, hey, really, that's the whole point of coming into here and making sure you're asking questions. That's why I'm here. I'm on the mic for an hour a day. Give me something to talk about. Oh, Rami, you're afraid you're in too many rooms and already won't be able to keep up. Yes, that is a legitimate concern. If you are in too many things, sometimes trading can be difficult. So make sure that you stay focused. What I do though, other than the day trades, and let's just say if you like my style of trading, if you don't want to do the day trades, then just ignore them and look for when I do my swing trades. 90% of the time, I put trades on in the last hour of the day. And so that's how I do my stuff. And so if you feel like you want to also do my room and my kind of trading, you can be pretty well assured that anytime I'm going to put something on, most of the time it's going to be in the last hour of the day. So you can kind of just carve that out and expect something from me. Or if you at least just put on the trade by the end of the day, you can do that. So that's at least how I try to keep my trading pretty consistent and stuff. Yeah, Ole, I'm hoping MSTU, MSTR will be a super trade too. Yeah, me too. That's what I'm looking at as well. Oh, Beach Lady, GBTC. There we go. Yeah, GBTC. Let's see, where would that correlate to? I'm kind of thinking, let's see, where is it here? So I'm kind of thinking for GBTC, if Bitcoin is at 105, GBTC is probably going to be 82. I'm kind of targeting this area right there. So 80, 81, 82. We'll see if that can kind of happen for that one. Oh yeah, Remy, you catch all my YouTube videos. That's great. Yeah, do your best. Stick around as much as you want. Check out my videos, and if you find that you've got some more bandwidth, like if you cancel another room or something, come over here. We may or may not have the same deal, but yeah, you're familiar with me. You're connected, so that's cool. Stay in my orbit and see what you like. Yeah, let's see. Okay, then. Okay, then let's see. We got one more question over here on YouTube from Scott. How long did it take you to be consistent, and was there a point where stock trading was your main source of income? Yeah, it took me a long time to be consistent. Let's see. I really started to dedicate myself in my mid 20s, and I followed a couple other instructors, gurus, mentors, and I just couldn't quite get it. The way that their style was, she was like a savant, and it's like listening to music and just being able to play the piano. It wasn't like that, and so I followed her for about 3 years, and I just couldn't do anything. And then I kind of broke off, and that's when I started tinkering with indicators, and I made up the Moxie indicator, and I got that thing working, and I saw that, and I was like, whoa, there's something here. There really is something here. And then it took me about a year to actually learn about the Moxie indicator. So even though I kind of came up with it and like refined it and made it and all this kind of stuff, I had to learn it. It actually had to teach me how it worked. And that took another year for me to kind of figure this out, figure out the rules, because I was starting from scratch. I mean, I just created this new indicator and now I don't even know how it works. I had to observe it through, a year. And then I was kind of treading water because those first 3 years I was losing money. And then I was treading water once I first got the indicator. And then after that, then I really started to make money. And ever since then, I was really just starting to really understand because once I had the Moxie indicator, and it gave me the backbone to understand how these trades, trends, movements, just how the market worked, and not to get chased out on dips, or how to understand when the move was going to be over. That is when I really started to understand the market and get consistent. And so I would say it really took me a year, and then I'd started doing better after that. Once I actually had the right tool. And hey, maybe the Moxie indicator is not right for you. Maybe I'm not right for you. But the whole point is you got to find something that resonates with you. And when you finally find the teacher, the coach, the tools, the indicators that are right for you, then you'll start succeeding. And that's the whole point of what we do here as far as the trading rooms and the education is try to get you up to speed as quickly as possible. So if it took me a year from scratch doing this on my own, hopefully it actually only takes you a few weeks or months to really kind of get up to speed and figure this stuff out. But everybody has their own kind of learning curve, but we try to really give this to you right here. I mean, this is what I do every day. I've got my system dialed in. Certain times of the market are better. The market's easier sometimes and harder sometimes, but at least you can kind of learn right there with me. Hey, tell me, boy. Yeah, thank you. We'll see you in the room. Let's see. Ole, why is that so good? Yeah. So of course, I got a little secret sauce in the Moxie indicator, but basically it's a momentum based indicator. And the thing that I was trying to understand is I always liked the idea of divergences and things to figure out. And then I understood because I'm a mechanical engineer. And so that's where I come back as my background is mechanical engineering. I'm like, how does this stock market thing work? And what I was trying to understand this concept of divergences, and really what it told me was you have to figure out momentum, and momentum is really just rate of acceleration or deceleration, lack of acceleration in that case. And so what I was trying to figure is how do we kind of dial this in? And so what I was able to do is come up with an indicator that told me what the rate of acceleration was of price from time frame to time frame, from point to point. And you can plot that acceleration. And then once the acceleration starts to decelerate, then you can kind of figure out the difference between the two. And that's where you get the divergences. And that's how the Moxie indicator tells us that we're going higher, but on less energy. And that's a divergence. It's going up, but it's going up with less acceleration. And that's when you need to start watching out about the end of the move. And you can flip that around and say the same thing for an up move. When price is going down, if you see that it's going down with less speed, then it might actually be starting to slow down and actually turn around to the upside. And so, that's pretty much how the Moxie indicator works. HS, is the Moxie indicator updated periodically? No, no, actually, the core mathematics in the Moxie indicator have not changed in years. Not since I started this. Sam and I tried tinkering it for a while, and I came up with a whole bunch of different things. And I just said, you know what? The OG is it. I have not changed the math on this thing for 15 years. No, it is the same Moxie indicator. Now we've added a few bells and whistles, and we've added time frames, but the same Moxie indicator is there, and no, I don't change it. And that is the whole point. It is the same stuff all the time, over and over and over, and I love it, and that's all I have to do. It's the same stuff. Just apply it to the market, have a good market, and then just interpret it properly, and that's it. So, yeah, no, I actually take pride in the fact that I don't update it because it works. If it ain't broke, don't fix it. Yeah, chuckle, Jinx, man. And we both said that at the same time. Ole, yeah, oh, okay, you bought it and you're studying every day. Yes, I agree. Best on the hourly chart. I do love the hourly chart. It is, I think the hourly chart is the best middle ground between the 15 and the daily, and I think that is the sweet spot, is the hourly. If you want swing trading, hourly chart is the spot. Okay. Ole, U.S. oil on daily long maxi. Yes, I saw that it fired today. We actually had somebody in the room ask me about that. Right now, I'm just going to say it's a move. I can't say that it's a trend because if you look at the daily 50, it's still in a downtrend. So I don't really trade oil. There may or may not be something about that, but it's too early to say that the trend has changed. So a little too early on that one. Okay, guys, looks like we're kind of out of questions, which is great. I'm happy to answer all of them for you. And really, guys, take me up on this special. It's a good deal. Spend a little bit extra if you like it. You're going to be saving way more money in the future if you stick with this. And I think it's just it's a good deal for you. Other than that, I look forward to seeing a bunch of new names and faces and handles in the Moxie room over the next few days. If you do, come on in, say hi, and when I'm on the mic, I'm exactly like this. We'll talk about it. I'll help run you through some stuff, and we'll give you a crash course on the Moxie indicator if you want it. Otherwise, just dive in, and it's going to be like osmosis. You guys are going to spend time in the room. You're going to see how I do this, and you're just gonna absorb it. And every day we talk about the market and we learn about it. Okay. So other than that, thank you guys. Appreciate Mirza, Lorna, Renda. We got everybody out there helping to keep this motor running as far as Simpler and our rooms and our presentations. So thank you for keeping it smooth. And as of that, good luck to you guys out there, and we'll see you back in the room.